Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, annuities, disability, business continuation, or final expense life insurance funding, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing life insurance for seniors, 10 things you should know. Now, let's dive right in. The number one thing may seem a little bit obvious, but let's go with it anyway. Life insurance is designed to provide financial support for your beneficiaries in the event of your death. And specifically, final expense life insurance is intended to take care of those final expenses. You know, those things that you don't want to burden your family with, loved ones, children, anything like that, when they're going to need the most help. We've never met anyone who said that, you know what, I just want to surprise my kids with a $10 or $15,000 funeral expense when I'm gone. Nobody says that. If you're responsible, you want to make sure that others aren't burdened with your expenses, that others aren't burdened with financial surprise that should have never occurred in the first place. And here's the thing, we all know we're going to die someday. Nobody gets out of this world alive. And we know that there is an expense to dying. Unfortunately, the government doesn't pay for it. You know, even if you have military honors and, military service and stuff like that, they may contribute a little bit, but they're not going to pay everything. And certainly Social Security is not going to pay everything. And, you've basically got two options out there. You've got cremation and burial. And the coverage amounts for both of those vary, based on your wants and needs and what you want done after you're gone, if you want any money left behind. And to a large extent, it matters where you live and state-wise, but even locality, because some areas are more expensive and some areas are least expensive. But ultimately, this insurance is just really intended to help minimize or totally eliminate that burden to your loved ones. You can get a little bit of insurance or you can get a lot. We recommend not going crazy. This is final expense insurance. We recommend you just get what you need and then build in a little bit extra money to adjust for inflation. So if the current cost of a burial right now is $10,000, you may want to look at $15,000 to $20,000, depending on your needs, because we know that prices go up over time. And if you expect to live another 10 or 20 years, should really build in some extra funds in there just to adjust for the cost of inflation. If you have any questions about that, we can certainly help you out. Just reach out to us at funeralfunds.com or 888-862-9456. Our second point is that there's two main types of life insurance for seniors. That would be term life insurance and permanent whole life insurance. So term life insurance is exactly how it sounds. It goes for a specific term, a specific period of time. Whole life insurance lasts your whole life. So if you're looking for final expense insurance for seniors, there's a few options out there, but I would say that they are less than ideal. A lot of times you would see companies out there advertising, hey, you can get approved for $1 for the first month. That's a big red flag for companies out there, in our experience, that offer term life insurance, and they've got 5-year age bands in it, which means your price is going to go up every 5 years. And what ends up happening with those plans is typically they get so expensive over time that people have to cancel the policy because they can't afford it, or they grow so old that the life insurance company is going to cancel the insurance. Typically that's going to be after age 80. And what ends up happening is now that is all profit for the insurance company. And that's why those term policies are so much less expensive than whole life insurance, because very few of them, in the end, very few, less than 10%, and I think it's probably around less than 3 or 4%, actually ever end up paying out. So if you want an insurance policy that's guaranteed to pay out, you want permanent whole life insurance. And the reason it's considered permanent is most of the companies out there go up until age 121 years old. And nobody's going to live until age 121 years old. They just wanted, they picked an age where they knew nobody would live to. And yeah, so it's basically essentially permanent life insurance that you're never going to have to worry about. Once you qualify, if you qualify today, you will qualify at your lowest rate at your youngest age. So you're going to get your lowest premium locked in. Now, we're a broker. We help people with many different insurance companies because there are some companies out there that can be well over 200% more expensive than first day coverage companies. We don't recommend you get a 2-year waiting period. Don't do that. Get first day coverage. That's what we specialize in. We don't even sell any 2-year waiting period plans. We are fully committed to getting first day coverage. So if you need some help with that, just reach out to us. We can certainly help you out with that. Now, let's talk about term life specifically. Those 5-year age banded policies are typically going to go up in price when your age ends with a 1 or a 6. So, like at age 61 or age 66. And they will continue to go up in price every 5 years. They will just re-index to your current age, and you will be essentially buying insurance at 5 years, after you bought that existing policy. So they just get more expensive over time because they match your current age. Now, there are some policies out there where you can get like 10 or 15 or 20 or even 30 years of coverage. The challenge with that is a couple things. If you're 60 years old or 70 years old, perhaps you won't be able to get a 30-year policy because most of those policies they will terminate by the time you get to age 80. So if you're 60 years old, the maximum you could typically qualify for is a 20-year plan, because 20-year term plan, because that would put you at age 80. The other challenge is those policies are not ideally suited for final expenses, because a lot of them you have to have like a minimum amount of coverage of either 50,000 or $100,000, which for most people, if you're just looking at taking care of your final expenses, that's just not viable. It's too much coverage, number one, more than you want, and it's going to be probably more expensive than you want to pay. That's why these smaller permanent whole life insurance policies typically work better than term life insurance. So we just typically do not recommend term life insurance for seniors, and we almost never recommend it for your final expense needs. The number 4 thing we're going to talk about is permanent whole life insurance, and its ability to build cash value. Now, we always tell people cash value it's a nice thing to have in the policy, but it should never be the reason you buy the policy necessarily, because we really don't recommend that people access the cash value for just kind of normal borrowing things. Here's the reason why. Most of the people that we help with final expense insurance are on a fixed or limited income, and they're tight on funds. And most of them care enough to get this insurance, but it's something that they have to really plan for, and they have to really want to have and provide for those who are left behind who would have to pay for this. But the challenge is if you're already on a tight budget and something major comes up and you have to pull money out of that cash value, let's say the hot water tank goes out, or the refrigerator, and you have to borrow $1,000. Chances are the reason people are borrowing that money out of the policy in the first place is because they don't have the money in the first place. So if they don't have the money in the first place, it's typically very difficult to pay that money back into the policy. Now, if you don't pay it back, if you borrowed $1,000, you would now have $9,000 worth of insurance if you'd started out with a $10,000 policy. So it's still going to pay out, but there's going to be an interest component that has to be paid as well. So if you're going to do that, make sure and make your regular payment, but pay that interest payment on there too, or they'll start deducting the interest out of the policy value as well. So what we really recommend it most for is that if your agent sets it up right, you can have that cash value set up so that if you accidentally missed a payment, like maybe you switch bank accounts, or your account got compromised and they gave you a new account number or something like that. What the policy can do if you set it up right is it can borrow against the cash value to make the payments on your policy so that your policy doesn't lapse due to non-payment. And it's a really nice safety net for your insurance policy. Now, we always recommend you go back and pay off that difference. Otherwise, it's going to deduct from your total death benefit and it will have that interest charge, albeit small, it will still be on there. So keep in mind that's a really nice feature to have. Now, the fifth topic today is that your premiums are going to vary based off age, health, and the type and amount of coverage that you choose. I think most people inherently know that, but there's let's talk about age. So most of the plans out there for whole life insurance start at age 50 and go up to age 85. However, we have some companies that go up to age 89, and we have some companies that go down to age 18. And we also have some companies that if you want to get a policy on a grandchild, ages 1 through 18, we can help out with that as well. Now, let's talk about the health component. You know, one of the main reasons people want life insurance is because they've had a sudden change in health. I can't tell you how many times we get a call from somebody and they go, I was just diagnosed with cancer. It's probably time to get this insurance. And that is just a little bit too late, right? I've just been diagnosed with dementia. I should probably get this insurance. So your health makes a difference. Now, don't get too freaked out about the health part. And because that's what we specialize in. We specialize in getting first day coverage for folks. And the reason that's so important, if you don't get first day coverage, in most cases, you're going to have to look at a plan that's got a 2-year waiting period. And there's actually plans in between first day coverage and 2-year waiting periods. But to a large extent, we do not recommend those plans because they can be so expensive. But we do have some companies out there that if you have some kind of more significant health issues, in many cases, we can get you slid in to a really affordable policy with first day benefits. So if that's the case, just reach out to us at funeralfunds.com. Now, your pricing is going to vary on the coverage amount. If just understand that if you had a $10,000 policy and you wanted 20,000, that 20,000 is typically not going to be twice as much as the 10,000 because they give you a price break when you get more coverage with most companies, and we can help you out with that. And also, if you have an existing policy, just understand that we can add coverage to that too. Sometimes with the same company, sometimes you're better off going with a different company. And one other thing is you can replace a policy. If you accidentally bought the wrong policy and you found out that you got a 2-year waiting period plan and you can qualify for first day coverage, we can help you out with that. If you accidentally bought first day coverage from a company that's super expensive, and boy, there's a bunch of them out there, we could help you get approved for perhaps lower pricing. Even if you'd bought your policy within the last few years, it's worth checking to save you money. Now, we will also say, don't automatically just cancel a policy. There's some agents out there that will cancel policies just to make a commission. And you don't want to fall for that because you want to do things for the right reason. You want an agent who will explain all the pros and cons for that. And we can certainly help you out with that. The sixth point we're going to talk about is it's important to review your insurance coverage as time goes on, because we know that inflation increases price over time. And maybe when you got your policy for your burial, let's say you just got a $10,000 policy, that was enough for right now, but you've been blessed to live another 10 years. And now that's not adequate coverage anymore. It'll cover, a good portion of it, but it's not enough to cover everything. So just reach out to us if you're in that situation and we can help you add more coverage. whether it's a policy that we helped you with in the first place or whether somebody else helped you with the policy. I can say pretty much across the board, if somebody helped you with the final expense policy 5 or 10 years ago, they are probably not in the business anymore. The, the the average time that a life insurance agent stays in the business, unfortunately, is pretty short, and it's pretty unusual to find a lot of agents like us at funeral funds who've really been in the industry a long time. Number one, because we enjoy it and we've got a passion for helping people. But we specialize in final expense life insurance, so we're really good at it, and we help an awful lot of people, and we'd love to help you with that too. So the seventh point we're going to talk about is you can buy life insurance on someone else in most cases. And the reason we say in most cases is the insurance companies have something called insurable interest. And what that means is typically you would have to suffer some sort of financial loss or some financial impact if somebody died. So if you're getting insurance like on a parent or a brother or a sister or children or something like that, yeah, no problem. Now it's going to depend on the insurance company too, because they've all got different requirements. So you really want somebody who's knowledgeable, who can get you with the best insurance company with the lowest pricing, who's going to accept what you want done as far as who's going to be buying the life insurance. And the other thing is they have to know about it. So the payer and the insured both have to be involved in the getting the policy approved. You can't take out insurance on somebody without them knowing. It's a legal contract. Everybody that's on the contract has to know about it. The other thing too is with that insurable interest is you couldn't take the insurance out on your neighbor who lives 2 doors down without them knowing. Or depending on the insurance company, you know, uh, even with their knowledge. So it gets into a fuzzy area with different insurance companies because they're vastly different in so many ways. And even being a beneficiary can be a little bit tricky because some insurance companies only allows family members to be beneficiary, and we've got some companies out there that it could just be a friend or a pastor or something like that. So it really depends on the company. Now, the eighth thing I want to talk about is some of the policies come with riders on them. So like one of the most notable is accidental death. Typically we look at that and go, yeah, there's a chance if you're in your 60, 70 days, you're going to die of an accident, but it's pretty small. And you can find out and understand why that risk is pretty small just by looking at the premiums, because the to add on the accidental life insurance, it's hardly any money at all. And some people would go, well, if it's hardly any money, I'll do it. But, in most cases, you would be better off just getting a little bit more guaranteed coverage because we are guaranteed to die. We're not guaranteed to accidentally die. There's some other riders out there too that really nice to have. Probably one of the most beneficial riders would be what's called the accelerated death benefit rider. And what that means is that if you had a $20,000 policy and you were diagnosed with a terminal illness with less than 12 months to live, depending on the insurance company, with some insurance companies, you could actually access the entire $20,000 death benefit 12 months in advance while you were alive. Now, some companies restrict that to 25%, some are 50%, and I'm sure there's some other ones out there, but we really try to work with companies that have a 100% accelerated death benefit rider. And you might be thinking, well, why is that important? Why would you want to get that money out in advance? Well, for a couple of things. Number one, if you are just diagnosed with a terminal illness and you have less than 12 months to live, you still got 12 months to live. So a lot of people would take some money out of that policy and maybe take that trip with a family member that they never took, or do something special for the family members or children or something like that. Use that money to kind of create that one final memory that, maybe you just never got around to doing. The other thing you can use that money for is to pay medical bills, because we know when there's a terminal illness, there's always going to be medical bills. And, That's what the insurance is for in the first place. When you passed away, it was going to be used for some of that anyway. It's just nice that you can actually get access to that beforehand so you don't have to deplete savings if there was even any savings in the first place. It's nice to get access to that money. Now, we will say that, you know, if you borrow $10,000 out of a $20,000 policy with the accelerated death benefit rider, the policy is only going to pay out 10,000, right? 20,000 minus the 10 you pulled out. When you die, it's going to pay $10,000, whatever's left. So just be aware of that. You want to leave enough money in the policy to, take care of your final expenses. But another thing you could do, if you know you've got 12 months to work on this, is you could go down to the funeral home. You could take care of everything. Again, you've got that accelerated death benefit. You could get that money from the insurance company. You could prepay for your funeral and make sure everything's exactly how you want it so that your family can have that wonderful remembrance of you. And then you'll know exactly how much money you have left to spend out of the $20,000 for maybe that trip or that boat cruise or whatever it would be. So it's a really nice benefit, and we really love helping people with that. And the bonus is, with the right insurance companies, it doesn't cost any money. It doesn't cost any extra money. You just got to check a box on it. Just got to make sure and check a box, and we always do that for you. The number 9 point for today is you will not, with the right companies, you will not, with the right companies, have to undergo a medical exam as part of the application process. The policies that we help people with for final expenses are called simplified issue whole life insurance products. What that simplified issue means is you don't have to go to the doctor. You don't have to get a blood test. You don't have to get a urine test. They don't have to request your doctor's records. None of that. We can get it all done over the phone. And most of the companies we work with, we can get you a same day approval over the phone. What the insurance companies will do is they will do a prescription medicine check. So what we would do is we would have you on the phone. We would do a conference call into the insurance company or one of the companies they have that handle this, and they would review the health questions, which we would have already gone over with you to make sure you qualify. Then they will do a prescription medicine check. And if they see that you're currently taking chemotherapy drugs, they will know you have cancer. And unless you've gotten the right plan, they will deny you if you applied for a plan that won't accept coverage for somebody with cancer. And of course, at Funeral Funds of America, you won't have to worry about that because we're going to help you apply and qualify for a plan that you actually qualify for. But it would be the same thing if they saw that you were on dementia medications. If you had dementia or you were on kidney dialysis and you wanted to get approved for a plan, you would have to apply to a plan that's going to actually approve those two conditions. And I can tell you what, those two are difficult. So yeah, just understand you are always better off getting this insurance sooner rather than later. Do not wait until you have a significant medical problem because it's just going to be tougher to get the insurance and it's going to be more expensive. So just reach out to us. We can help you understand all your options. We are terrific at what we do. And then our number 10 point and our final point for this podcast is it's important to choose a reputable and financially stable life insurance company. And that can be difficult because if you're just, you're not an insurance professional. You've probably got other terrific skills, but shopping for life insurance is not God's calling for you, right? So that's where we jump in and we help people because you want a financially stable company that's going to be around when you need it because you're probably getting this insurance and it may not pay out for 10, 15, 20, 25 years. I know one company we work with, they've been in business since 1895. Let me tell you what, that is a good, solid company with a good financial history that's able to be in business that long. And we really prefer companies that have been in business at least 60 to 80 years, and in many cases over 100 years. And that's what we'll help you out with because we will not help you with a policy that we wouldn't be proud to own. We wouldn't ever help you with a policy that we wouldn't be confident buying ourselves. So my name is Randy Vandervate, and I hope this podcast has been helpful for you. Funeral Funds of America can help you qualify for first day coverage with no waiting period at funeralfunds.com or at 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.